Hey everyone, welcome back to Corporate Decoder, the place where we break down even the most boring financial reports into juicy insights. Today we are diving into Pacific Sports Exchange in Capital Q report, which is kind of like a mini annual report for a 3-month period. Let's just say this one had me scratching my head a little. It has some very unique numbers. So here we have Pacific Sports Exchange Incorporated, a company that deals in sports equipment. They are filing their quarterly report for the period ending the 30th of November 2025. First glance, it looks pretty standard. They have all the usual sections like financial statements and management discussion and analysis. They are based in Portland, Oregon, and their stock is not trading on any major exchange, which is usually a sign that it's a smaller company. Right now, they have about 14.4 million shares of common stock out there. Nothing too outlandish there yet. The real meat of these reports is always in the financial statements. This is where we see how the company is actually doing. They have their balance sheet, which is like a snapshot of what the company owns and owes at a specific point in time, and their income statement, which shows how much money they made and spent over a period. Let's look at their balance sheet. As of the 30th of November 2025, their total assets were a mere $6,769, and that consisted of only inventory. They had zero cash. That is right, $0 in cash. Contrast that with the 31st of August 2025, they had a bit more at over $10,000 with a small amount of cash. On the liability side, things are a bit more interesting. For the 30th of November 2025, they had total current liabilities of almost $59,000. This is made up of accounts payable and accrued liabilities, and a significant amount due to related parties. This trend of owing money to related parties continues from the 31st of August 2025, where they owed over $52,000 in total current liabilities. Now, for shareholders' deficit, they have a big accumulated deficit, which means they have lost more money over time than they have made. As of the 30th of November 2025, it was negative $203,000. This is a common sight for very early stage companies, but it means they have a long way to go to become profitable. Let's move on to the statement of operations that tells us how they performed in the quarter. For the 3 months ending the 30th of November 2025, they reported revenue of $2,200. That may sound small, but it is a huge jump from $0 in revenue for the same period in 2024. Their cost of goods sold was $2,000 for the 2025 period, which means they had a gross profit of just $200. Remember, they had no revenue and no cost of goods sold in the prior year quarter. Now, about those operating expenses, they spent over $10,000 on professional fees in the quarter, ending the 30th of November 2025. This is a massive chunk of their revenue, and it was $7,591 in the prior year quarter as well. This is where a lot of their money is going. The total operating expenses for the quarter were $1,0281. All of this resulted in a loss from operations of over $10,000 for the quarter. This loss is larger than the revenue they generated, so clearly they are not yet making money from their core business. And after everything, they reported a net loss of $10,081 for the 3 months ending the 30th of November 2025. For the same period in 2024, the net loss was $7,817. So the loss has indeed increased. Interestingly, the number of weighted average shares outstanding remained at 14.4 million for both periods. This means no new shares were issued that would dilute existing shareholders. Now let's look at the cash flow statement. This is where we see how cash is actually moving in and out of the company. For the 3 months ending the 30th of November 2025, they used $1,476 in cash from operations. This is a bit more than the $975 used in the same period of 2024. And get this, their cash at the end of the period, the 30th of November 2025, was $0. Yes, that zero again. Back on the 31st of August 2025, they had $1,476 in cash. Under non-cash investing and financing activities, they show a forgiveness of a related party loan of $73,823 in 2024. That is a significant amount of debt being wiped away. In the notes to the financial statements, they address their going concern status. This is a crucial part. They are clearly stating that their ability to continue as a going concern is dependent on obtaining additional financing. They have an accumulated deficit and nominal operating revenues. They are essentially saying they might need to stop operating if they cannot get more money. They also mention a change in control where the previous officers and directors sold their shares to Alpine Elite Holdings Ltd, making it the majority shareholder. Huang Guoshang was then appointed as CEO, CFO, and sole director. This was a significant shift in leadership. The going concern note is pretty stark. It directly states that there are no assurances that the company will achieve adequate revenues or obtain additional financing. If they don't get more money, they may have to cut back or stop operations entirely. This is a major red flag. Under related party transactions, we see that the company relies on advances from related parties. These are essentially loans from people connected to the company to keep it running. They also mention a shareholder advancing money to cover operating expenses. As of the 30th of November 2025, they owed the current shareholder over $55,000. This debt is unsecured and interest-free but due on demand. This shows they are relying heavily on internal funding from a shareholder. In the equity section, we see they have authorized preferred and common stock, but no preferred stock is issued or outstanding. For common stock, they have 14.4 million shares issued and outstanding. This number has remained constant. This concentration note is very important. During the 3 months ending the 30th of November 2025, one customer represented 100% of their revenue. That is right, 100% from a single customer. In the prior year, there was no revenue, so we can't compare it. This extreme concentration of revenue with one customer is very risky. If that customer leaves the company, essentially has no income. This section really highlights the fragility of their revenue stream. One customer making up their entire income is a huge vulnerability. Moving into management discussion and analysis, this is where the company explains their financial situation and future plans. They reiterate their business model of reselling sports equipment online. They emphasize their reliance on eBay, which as they themselves note carries risks. If eBay has issues or changes its policies, it can directly impact their business. They also detail the change in control event that we saw earlier with Alpine Elite Holdings Ltd taking over, and the leadership changes. This indicates a significant strategic shift may be underway. Looking at the results of operations, they highlight the revenue increase to $2,200 and the resulting $200 gross profit. But they also show the increase in net loss from $7,817 to $10,081. The increase in operating expenses is also called out, with professional fees being a major component. This suggests they are spending a lot on external advice or services. Under liquidity and capital, they repeat the going concern warnings. They are very upfront about their need for more funding to survive. Their working capital, or deficiency as they call it, has worsened from negative $42,000 to negative $52,000. This means they owe more than they own. The cash flow section reinforces their cash crunch. They used more cash in operations in the recent quarter and ended with zero cash. Now, for controls and procedures, they admit that their disclosure controls and procedures were not effective. They cite a lack of accounting expertise and inadequate supervisory review. This is a serious issue that means their financial reporting might not be fully reliable. They explicitly state a material weakness in their financial reporting process. This means there is a genuine possibility of errors in their financial statements not being caught in time, which could lead to restatements. They are also dependent on third-party accounting consulting. On a more mundane note, they state they are not involved in any ongoing legal proceedings, which is good news. Finally, in the exhibits, they list various corporate documents. This part is usually not very exciting, but it shows what official paperwork has been filed. So what does all this mean for Pacific Sports Exchange Incorporated? Well, this report paints a picture of a company in a very precarious financial state. Their revenue is extremely low and concentrated with one customer. They have a significant accumulated deficit and are burning cash. Their professional fees are high relative to their revenue, and they admit to having ineffective financial controls with a material weakness in their reporting. On the positive side, there was a change in control which might signal a new direction or strategy by new management. They also have a relatively stable share count. The forgiveness of related party debt is also a positive that reduced their liabilities. However, the overarching narrative here is one of survival. The company is heavily reliant on external financing and related party support to stay afloat. The fact that they ended the quarter with zero cash and openly discussed their going concern issues is a major warning sign. The reliance on a single customer for 100% of revenue is an extremely high risk that could unravel their business overnight. While they are operating and trying to generate revenue, it is clear they have a long and uncertain road ahead to achieve profitability and financial stability. Alright, that is our breakdown of Pacific Sports Exchange Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.